Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. Monday, 12th of September, 2022. Coming at you from the West Coast. We're on location at Future Proof Conference, beautiful Huntington Beach, California. Conference is actually outside, which is a first for me. So far, so good. Working out well. They got stages right near the beach. Really cool scene. Meeting a lot of really cool folks out there. Hopefully, some of you are tuning in. That would be fantastic. Come find us today. And if you are listening and you're at Future Proof, I'll be the guy with the Park City football cap on. So come say hello to us. Equity futures in the green, up around 50 bips this morning. Commodities up as well. The big exception to that is natural gas. Silver up like 4%. So a lot of this, I think, percolated from the declining dollar, right? Saw a little weakness on Friday, seeing a little more weakness today. That's obviously a great sign in terms of anything commodity land. See how far that trend goes. Dollar's just been an absolute juggernaut, and a lot of it, I think, is kind of precluding where the rates are going to go. So the more the dollar comes back, I think it'll be perceived positively. So in terms of that, S&P on Friday closed above its 50-day. We talked about that on Friday morning. It's going to gap up, open above the 50-day. Hung out there all day, closed above its 50-day. Had a strong day. Triple Qs are going to try to do it today. Resistance, we talked about that for the S&P on SPYs at around 426 from the technical work that we do. That's also where the 200-day moving average is, so really important level there. We'll see what happens. I mean, tomorrow, obviously, we've got CPI coming out. I think everybody's looking for a decline in that sort of number, a cooler reading coming off of July. So we'll see what goes on there. But make no mistake, I mean, people are very defensively positioned here. So this rally can continue to have legs in the near term, in my opinion. Goldman Sachs out with an interesting energy piece. Take a look at that if you care about the space. 6 investable themes they're talking about in energy, 2 of which I think are worth mentioning right here. Natural gas will be a core of the energy ecosystem for the next decade. I think that makes sense. They talk about EQT as a big beneficiary there. There's a lot of names on the E&P side. Antero, AR, Chesapeake, CHK. There's a couple we've talked about, a couple that we own here. Energy security, they're talking about seeing an inflection in energy spending that's going to be on a multi-year basis. They cite Halliburton, the big beneficiary there. Obviously works for Schlumberger as well. I think that one makes sense. Halliburton's actually done nothing. That stock has just been a kind of a dog recently. I just pulled it up, and it's who knows? It's an interesting level for sure if it starts to work. We've talked a lot about med device, the IHI. It's had 3 pretty strong days. It's one of our largest holdings. I think it still makes sense for new and additional money. Looking for the group to probably be one of the strongest components of healthcare going into year end. Valuation, you've got improvements in supply chain, improvements in staffing, elective surgeries are back. You've got the intensive care beds freed up by a lack of COVID patients, so that's a nice tailwind for these guys. That closed above its 50-day moving average, making higher lows on the chart. Looks good. New curbs in China from the U.S. government this morning targeting artificial intelligence. So NVIDIA, AMD, this one's for you. See what goes on there. The deglobalization trend continues. And like I alluded to, we do get CPI tomorrow. Everyone's looking for a cooler number. You're going to have those stubborn rents and labor inputs that I think are going to keep things elevated for longer. But for now, the market might get what they want in terms of cooler reading for July. That's it. Have an awesome day, and we'll talk to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.